What's going on, everybody? It's Jeff here. Welcome back to the channel. I wasn't able to make a video yesterday for you guys as I was doing some traveling, but my gosh, what a rally we had. And of course, not a single word from the media. Although when AMC goes down 1 to 1.5%, they're freaking out saying it's a horrible buy. I hope that yesterday gave some of you guys just a little bit restored faith, okay, as it just stopped a series of bloody red days. Guys, in this video, I want to talk about something I mentioned in a video I made a couple days ago. We're going to talk about that. And then also I want to talk about exactly where we stand. So stick around, guys. Let's get right into it. First and foremost, the market itself recovered after a horrible Monday. As you can see here, this is the SPY, which is an S&P 500 ETF. You can see numerous times it bounced off of the 200 moving average. We are looking at the 2-hour chart right now, and it did just that, very quickly recovering. I did make a video talking about a little bit of the fears of the Delta variant, and I think that was amplified in a lot of investors' eyes. Okay, the Delta variant has been talked about for a few weeks now. It's something that is not very new, as well as COVID is probably going to be something that is going to continue to be around, almost similar to, you know, a flu season. It's going to be talked about. It's going to be part of our, you know, of our economy. Okay, and it's going to have, the market is just going to have to adjust accordingly. But it is good to see that the S&P 500 and the entire market overall did have a strong rebound. Now let's take a look at AMC. Currently we are down a little bit intraday. I'll just take a quick peek at the 1-day 1-minute chart. As you can see right in here, it's not exactly following, okay, the IWM, which is a Russell 2000 ETF. AMC is very heavily weighed in the Russell 2000. As you can see, the IWM has been pretty stagnant today, which this tells me, guys, that AMC is continuing to be directly shorted. In the video I made a couple days ago, I explained to you guys that some of these shorts that took on new positions in the 40s, potentially the 50s, okay, and got it down into the 30s, they're going to come to a time where they're going to want to lock in some of their profits. All right, many of them are already still very, very much in the red on when they were shorting anywhere from that $5 to $15 range. Okay, that could be attributed to some of yesterday's gain, but hey, like I said, it's a very small position that would be covering. By no means is it near the vast majority that was done down in the $5 to $15 range, and any little bit, okay, of that small shorting, those small percentages that gives us our 10 to 15% day gains is going to be absolutely awesome for us as retail investors. Okay, let's take a deeper look on just where we stand on the 2-hour and 4-hour chart. As you see mentioned in here, guys, that $43 level as we bounced off of, okay, today is acting as another resistance. I can see us bouncing off that $39.50 to $40 level, which will act as a previous support from, you can see here, guys, looking at the 200 and 100 moving average. We jump into the 4-hour chart, which is probably my favorite chart to look at. You can still see here, guys, I want to make sure you can see it on the screen. Okay, we are bouncing off of that $43 level. The MACD has completely confirmed that we have started to make that uptrend again. All right, I was talking about this numerous videos before, talking about that complete curl, that complete confirmation that we are in a confirmed uptrend again. RSI is still sitting perfectly at 47. One thing I want to point out to you guys, this is looking at the 4-hour chart, then we're going to take a quick look at the daily chart. Okay, this might have just been a straight open wick here, but we got 1, 2, 3, 4, 5 green candles, okay, together in the 4-hour chart. If you go back looking through here, the last time we saw 5, okay, ends on the 23rd. All right, that was the last time we saw a good amount of just positive momentum. There wasn't as much movement in here, but at least it was simultaneous positive momentum. We jump over here to the daily chart as well, and this one is even more profound. The last time we saw 2 green candles on the daily chart was all the way back here on the 23rd, which has almost been a month. All right, looking at the MACD on the daily, it has not really confirmed that complete, you know, nice curl to confirm an uptrend. But no matter where we close today, it's still, like I said, it's still looking to be above higher grounds. And on the daily chart, considering that 50 moving average is sitting at $39, we are entering what I like to call that blue ocean, okay? When we look at that blue ocean, which once we can get over that $43 level, we will completely be in. We don't have those moving averages acting as previous support and resistance. There is going to be a little bit of resistance in that $50 to $60 range because we spent a lot of time there. But once we can bounce above that $43 range, that's when it becomes a blue ocean. The stock is going to move a lot differently. All right. So I'm really excited, it being only Wednesday, to see how the rest of the week plays out. Another thing I do want to point out to you guys is you can see the amount of options volume coming in for AMC. As I previously looked at this right before I started recording this video, it was sitting at about a 70% to 30% call to put ratio. We were very comfortable around this ratio for a long period of time. Once we had, the heavy downtrends, that's when you've got to see a little bit of a 50-50, okay, even more puts than calls. So to see us get back to that range is something I definitely want to see. Now, for the last thing I'm going to cover quickly in this video, guys, is something I really want you guys to pay attention to and monitor this with me. If you haven't seen the other video, I will leave a link down below talking about strike prices not being added in on the weeklies, and just the potential that, okay, some of these hedge funds of abusing options, whether it's deep in the money put options, call options, out of the money, whatever abuse that they were doing, that strategy might be limited. As you can see, okay, they got rid of the 50 cent and the $1, and these are on the weeklies, guys, because the monthlies have already been made out. But if you jump over here to August 13th, and I made in my last video, the $22 strike was the lowest strike price. Well, they added the 21, the 20, and the 19. Very little open interest. Okay, it's a little bit surprising to me because since I made that video, the stock price for AMC has only gone up. I would expect, if anything, it would to be higher than 70, which was the previous highest strike price. So I'm not really sure to why they're adding these lower strike prices, especially, okay, if the stock price is moving up. Like I said too, guys, if you haven't watched that video, I've never followed AMC as close, or a stock like I followed AMC as closely before. Okay, so this might be something that is fairly normal on the weekly options chain. Like I said, it's just something I've never seen before. So I wanted to give you guys an update saying they added those 3 strike prices. I'm going to monitor the open interest. Okay, if you come even back to where we are sitting for just 2 days from now, all right, there is a lot of open interest still in the money for on the call side, and a ton of open interest on the put side falling out of the money. I mean, you look at the 15, the 20, the 30, even the 31, a lot of options, okay, them bleeding money, guys. So that's it for this video. Let's continue this rally for the end of the week. I'll see you in the next one.